Jeff, yesterday was kind of a weird day. I mean, the Dow rose over 500. Normally, the NASDAQ outperforms. It didn't. I saw some commentary and tweets. People are starting to wonder, is this sort of the sign of a bigger turn? What do you think?
Well, it was positive, Sully, absolutely to see it, but we're calling it the catch-up trade. And the catch-up trade is really focused on industrial. So look at XLI. That's the broader swath ETF. You're seeing a lot of names in there. If it's 3M, if it's Raytheon, Lockheed Martin, a lot of those names that have been laggards, they did get some love yesterday. But we're seeing International Paper. We're seeing Masco. We're seeing a lot of names that have just been left kind of in the ditch as the darlings, the tech giants, continue to move higher. We look at Amazon up 30% year to date. We look at Microsoft up nearly 16%. So I think the tech theme continues and persists, Sully, but I think it's a really encouraging component to see these laggards participate in this catch-up trade.
Yeah, and we're showing some of the chart. You know, with Dom's excellent piece there, he talked about analyst price targets. They may be behind the curve. I mean, if the economy, we call it, sort of the reopening rally. I'm not sure that's accurate. I would say it's more optimism of a recovery rally that we're going to either spend or do more because we're going to just get back into the groove perhaps faster than people think. Do you think that analysts are going to have to catch up as well, to use your term, Jeff? They're going to have to start raising price targets that they have previously cut on the realization that maybe, just maybe, we're going to get back to business a lot faster than people thought.
I think that's a great point, Sully. A lot of analysts have really been prudent in their forecasting, and rightfully so, as they've priced in a lot of the doomsday as we rewind back to the month of March. But what's interesting, as we're 40% higher off of that March 23rd low, what are we seeing? Last Monday, that's when we saw hope for a vaccine, hope for state and local governments reopening. Here in the city of Chicago, we're in a different restriction. As I was in Wisconsin last week, and it certainly was a little different component, but I think we get optimistic about a potential vaccine in the state and local governments, not only opening domestically, Sully, but look at the hopium we're seeing over in Germany, and the ECB kind of coming with more stimulus. So there's just a global sense of excitement. I think that's the rally, but momentum is here. The real risk of the market is being short or potentially underinvested.